Hi everyone, and welcome to this week's Play of the Week. This is Paul Lang from Disciplined Trading Strategies. With the Play of the Week, if you missed the last 2 weeks, you didn't really miss them because the last 2 weeks were Christmas and New Year's. So they're resuming them this week ending January 7th. This week, to start the new year, I am showing you a losing play. Trading is not all about the winners. Everybody loves to see the winners. I know you like to try and duplicate the winning trades, but this one is about a loser. I dislike weeks like last week quite a bit, but I had a really good trade underway here on Cmcm, and I made a mistake on it. It was one that I think is partially justified, but I want to walk through it with you and show you how this can happen. Part of it was a good reason, part of it was a bad reason. This was Cmcm on the 4th, on a Thursday. This was a play based on a gap. It was an advanced entry, but the management was very simple. As a matter of fact, the simple management turned out to be the problem. The rewards risk negative 0.4 to 1. In other words, I lost about a half of a risk unit. I raised the stop on this, and that was the problem in this case. By saving that half of a risk unit, it cost me about 4 risk units of profit. This was the daily chart of Cmcm, and it's gapping right there on that particular day. And this particular gap was one that I was very, very bullish on. You can see that bottoming tail though, and that got to be part of the problem. After gapping up, the stock pulled back about the maximum amount that I would want it to pull back, a little beyond that actually, to still be considered an aggressive type entry. This is a 1-minute chart. You can see the gap right there on the 1-minute chart. And it fell, that's created that bottoming tail during the first 5 minutes of the day. It got just to the point where it was borderline to me, so I went ahead and entered, but I did have some reservations about if it would bounce from here. Because the stock went sideways for the next 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes, I lost a little confidence in it and decided to raise the stop to where that low was, just under where I entered. You can see the stop just traded pennies under that before it took off on a non-stop rally. Part of the reason I raised it was justified because it was questionable pullback and it did not bounce. These type of plays usually rally fairly quickly when they hit the bottom. This one did not. But part of it was because I also entered a second play and became worried about my overall morning and wanted to raise the stop for that reason, partly because I thought if I got out of this close to break even, I could replay it. But of course, that rarely happens. The stock flew right to a target after I got out, no chance for reentry. And that part of the decision was a mistake. You shouldn't ever change the management on a good play to justify your overall profit and loss for the day. So here's a losing play showing you how it happened. This is something, if somebody sent me this play, I would really yell at them for doing a bad play. And I want to show you it happens sometimes to anybody. You got to follow up on what you do and check these things. And it's not likely going to happen to me again for the next 6 months. This play and many other plays, of course, are done in the DTS trading room. If you've not been there before, come check it out. Go to the website and find out about getting a trial to the DTS trading room. Until next time, this is Paul Lang for Disciplined Trading Strategies. Good trading, everybody.